call, but skipped it today. I thought I'd do a quick update on Tesla, which just reported earnings this evening. And I got to say, I've listened at this point to about 70, a little bit over 70 calls this quarter. This was by far the strongest earnings report that I've listened to thus far in the S&P 500. So I'm just going to do a really quick run through as to what I saw and a few solid key highlights that differentiated it from not just the other calls, but also specifically past calls on Tesla. Um, One second. I'm going to share my screen. Past performance is not indicative of future returns. I definitely have positions on Tesla, mostly long, but because they're structured as options, they are a little bit funky in structure. I won't try to go through exactly how I did it, but essentially, what I really want to talk about as relates to Tesla is what made it strong, both from the perspective of it was a incredible quarter, but also from the perspective of what made it a good call, is that more than any other call, he went through the thematics of Tesla and how to think about Tesla, not just for this year, but for years to come. And I think what made it so different, it's not that he doesn't talk about strategy in every single call that he's ever done. It's more that I think because of all the weirdness that's been in the stock in the last few quarters, in this particular one, he gave very concise sound bites as to what you should expect out of Tesla and what kind of strategy he was going to do given the current market environment and why they were still going to succeed even in the case of a recession situation. Thus far, as an investor, you've been forced to try to figure out how would Tesla do in various scenarios, et cetera. Here, it was so clear. So let's actually take a look at what the numbers were on the quarter that made me super excited about it. Again, like I said, this is not investment advice. This is just for education, just so that you can see my walkthrough of it, such that when you do your walkthrough, maybe it'll make it easier for you. All right. When you look at the quarter, first of all, no one has done these numbers within the S&P 500 thus far. This has been probably one of the worst quarters remember, I listened to literally 400 plus companies of the S&P 500, and most of them are giving me very average revenue growth, so single digit. And then I'm just looking for not having a decrease in EPS, but in a lot of cases, EPS is coming in very weak, meaning people are getting inflation pricing, but they're getting squeezed on operating margins. This is one of the few period that was able, actually, I think it's the only one thus far that I listened to in the S&P 500 that has managed to not only still give you ridiculously strong revenue growth, up 34% year over year on the quarter, Q4 to the last Q4, but also EPS up 58% quarter over quarter. Now, there are two really truly baby things that if there's a bunch of haters, they could come in and say this, but we're going to talk about it so that you don't have to be concerned or confused as to what that hater talk is. All right. Here's what the haters may take a look at. The first is they may look on the balance sheet and say, hey, we keep growing inventories like crazy. In fairness, they're up only 24% quarter over quarter. And again, we grew revenue at 34%. Okay. So I'm not concerned that the inventory keeps growing. And also, given what he said he is seeing as relates to auto sales, as relates to no slowdown, and also the number one thing that he made me feel very comfortable about was that he might get a little bit of impact for financing, but he's still already taken that in consideration. So given all of that, if you hear a bunch of focus on inventory, I'm going to be really disappointed in those analysts. Okay. The second thing that is a little bit quizzical, it was not clarified on the call, and it really truly is guessing. I have my guesses, but it's this one line item that is changes in operating assets and liabilities net of the effective business combinations. Okay. The thing is, okay, all of the presentation always comes out as an 8K. Then you have a 10Q that comes out. Well, in this case, it'll be the annual report because it's the fourth quarter. And so you don't actually get all of the notes to the financials until that time. So this is outstanding. I will be looking for the notes on the financial because it does take about $2.7 billion out of operating cash flow. That said, I would only be really like any analyst that's going to go too bonkers on this really is going to have to, hey, Bell Piptivo, is really going to have to explain to me why they're going so bonkers, because the cash position is still exceptionally strong. And I'm going to talk further about the cash position and why that becomes extremely important in Tesla. But if you look at it, he's got plenty of cash. He's not even remotely hurting at 22 billion. And I didn't stick the liabilities on here, but you can take a look. He's in net cash position. So there isn't a lot, like they just don't hold debt. That's the deal with Tesla. That's why any crazy person out there trying to say that every other car company has market cap, blah-diddy, blah-diddy, blah. What they fundamentally don't understand is two things. I've said it before in other calls. I will say it again. Number one, Tesla doesn't have any debt. That is totally different from every other auto manufacturer out there. Number two, the most important thing is Tesla does not finance its own cars for the most part. They do in a couple of places, in a couple of spots around the world. But largely speaking, the financing arm is not selling cars. Like the financing cars isn't at all the main way that that Tesla makes its money. That is not true. If you look at GM, there's a whole section on GM finance, Ford, go on down the line. Okay. The other thing that other people don't understand about Tesla, and I've said it in the past calls, is the dealership structure is totally different. As a result, they don't have nearly the same kind of operating structure. So for the Tesla haters, I'm just going to say it right there. This quarter will show clear as day the difference between Tesla and the other auto manufacturers. And if you don't understand that, I almost can't even talk to you about why Tesla is Tesla. But the thing that I think was pretty amazing about this quarter, there were a few things, and I'm going to play the clip. Kim, I got your question as soon as soon as I'm done with it. I will address as relates to why there's been so much selling pressure in Tesla. But I want to show these two clips that really are. Let me stop sharing for a second. I really want to show these two clips that are kind of important. The first clip has to do with. It has to do with the Tesla insurance business. Now, I knew that this existed. I didn't know how big it was getting and how it was going. And one of the investor calls really spoke to this. Now, what's really amazing is because they don't have the cash draw off of a financing business like literally every automotive company, they actually have plenty of capital for this business. Plus, this business makes so much sense in so many ways. And I'm just going to play that section for you. Give me 1 second on this. Oh, it was prepped up and now it's not. 1 second. The thing with insurance is because it really gives you the cash up front. It's still about $300 million. So it's a little bit on the small side. But 1 second here. We're just going to share screen. But this is something that I think you really have to understand it. It's a really big deal for Tesla going forward, and where I think it actually is demonstrating very clearly how it's looking at the opportunity that may differ from literally everybody else. Here we go. I think it's this one. Share. Hopefully this is it.
That's actually a tremendous upside potential, because all of those cars, with a few exceptions, I mean, only a small percentage of cars don't have hardware 3.
Oh, sorry. You know what? My bad. It's this one. Ooh, sorry. 1 second, guys. Got the wrong clip there. Okay.
I think it's probably going to take some time before this business.
Rewind it just a little bit.
You know, let's say for argument's sake, if hardware retrofitting hardware.
Okay.
Yeah.
This is sorry, I'll just tell you, the question had to do with when will the insurance become a part of the income statement so that we can actually see it broken out. And it's about $300 million. So it is on the smaller side. If you look, most of the businesses that show up are closer to, several billion dollars as far as their contribution to income.
I think it's probably going to take some time before this business is large enough for specific financial disclosures. But I'm happy to provide an update on where we stand in the business. So we're currently at a $300 million annual premium run rate as of the end of last year. We're growing 20% a quarter, so it's growing faster than the growth in our vehicle business. And in the states in which we're operating, On average, 17% of the customers in those states are using a Tesla insurance product. So, and that number continues to tick up as we spend more time in markets. And we see most of the adoption occurring when folks take delivery of a new car, as they're setting up insurance for the first time, as opposed to going back and switching when they already have insurance set up. So there's an inherent stickiness in the insurance business. But
Yeah. Sorry, go ahead.
no, I was just going to say, just as a broader reminder on kind of the motivation for starting this business, it was to improve, and still is, to improve the total cost of ownership of our cars, given that we're seeing high premiums of insurance from third-party companies. And that remains our priority here. We'll obviously run this as a healthy business, but we want to make sure we keep our costs low, insurance stays affordable to our customers.
So in other words, this business, so you got to think about this. Right now, insurance companies are charging very aggressively. They do have actually a competitive advantage to offering insurance on their own cars because parts totally makes sense, right? Their parts and the way that they're going to do their parts makes sense. Now, this clip goes a little bit longer, and Elon then talks about the fact that because they are actually insuring these cars, they're also building them to make them easy to fix for the major types of accidents that happen that they then are responsible for. So I suspect that they will absolutely do an incredible job managing this business. Now, I want you all to remember as well that insurance, when it's done correctly, is ridiculously profitable because you take those cash flows in and you pay out based on accidents. Here, we have a Tesla that's potentially going to be in less accidents as things go forward. And that is just really cool to have that as a piece of business. No one else in EV is doing that because no one else has the vision that he then talks about in the second clip that I am going to play. One second. He talks about autonomous driving, and I really want you guys to hear this because this is one of the bigger strategic advantages that they have. But I think a lot of times people don't fully understand where he's going with it. And here he clarifies it. I don't think it could be more clear. He clarifies what the vision is and how exactly it affects not just Tesla, but the actual depreciation of a car from an individual's perspective. Very cool. Let me show you.
That's actually a tremendous upside potential because all of those cars, with a few exceptions, I mean, only a small percentage of cars don't have hardware 3. So that means that there's millions of cars where full self-driving can be sold at essentially 100% gross margin. And the value of FSD grows as the autonomous capability grows, and then when it becomes fully autonomous, that is a value increase in the fleet. That might be the biggest asset value increase of anything in history.
Okay, so in other words, what he's saying is because the way that autonomous software is rolled out, meaning you literally can just roll it out as soon as it becomes more and more capable, then the asset that you have as car, which you usually think of as this maddeningly depreciating asset, now has this new super feature attached to it. That's part of the reason why he sees the vision. And then those that have been paying for it all along, they get it right away. For people that know Tesla as a car, they probably already know this better than I do. Since I live in the city, I don't own a Tesla. But so those that have been paying for it, no problem. But if you want to add it on as a package after it becomes available, they can roll it out without having to do any kind of further sale. And to the extent that it comes out the vision that he thinks it can be, it immediately stops some portion of the depreciation on your car. Kind of like how things work as relates to new features on different things that immediately happen from a software perspective. So it's a very interesting way to think about Tesla, which is both as a piece of hardware and as an operating system for software. Now, the other key items, those are the 2 clips I had prepared, but I do want to talk about 2 other things that he talked about that were really, really relevant for why this was such a stellar call this quarter. The first thing I want to talk about is batteries in trucks. Now, some people have been like, listen, this trucks thing, it's a big deal, but it's not a big deal. Yes, it's going to be a small percentage of revenue. It starts this next quarter, but more importantly, he got pushed a lot on the batteries for those trucks. And people kept pushing him. And finally he was like, Okay, if you're asking me if we might use these batteries for other amazing things, yeah, the answer is yeah, for sure, because the battery technology itself is the point. And that brings me to make sure that anyone that's been reviewing this, and I have said this before, but I know it goes missed almost every single time. I want to make sure that people are reviewing this line item right here, which is the energy generation and storage revenues. That actually was up 90%. It's been growing like a champ. For a while, you'll see Q4, Q1, Q2. It was really small. It was barely growing. But now we're seeing real pickup in energy generation, which isn't anymore. And it sounds like in the future will stop being just the battery storage business. So that's like a very big deal. The second really big deal that I think may or may not get met is the cash build. Okay, let me show you again so you could see it very clearly on the balance sheet. The cash build was pretty good, quite frankly, given all of the mess that we have heard on the news, all of the suffering that we Tesla shareholders have had to have. But he grew cash somehow, despite the inventory build, despite all this other stuff going on. He did not draw down cash in order to do it. He's still at 22 billion. And he has like tons of undrawn facilities. So the cash position is great. And when asked, what's up with that? Like, what are you going to do with all that cash? His answer was really he was keeping it just in case we do actually go into a recession because cash is king. And I'm going to tell you now, given that I literally look at all of the balance sheets across a large cap US auto companies, so Ford and GM, their balance sheet doesn't look like that. So what I believe he's referring to is something that I've been concerned about this entire time is what impact does Tesla have, given that so many of the banks are saying that they are not going to, they're going to high grade their credit, meaning usually automobiles, auto leases, etc., even if they're prime and above, are kind of like the odd man out. Financing kind of dries up slightly to them. In this case, he's saying, no, I'm good. I got enough cash, even if that happens, to try to support the market in those cases that where it still makes sense to do so. Now, the other things that people will hopefully mention, but are kind of key, is that they are actually continuing to grow the China business. China reopening will just be gravy to this story. Additionally, some people asked about the ability of the Berlin and Texas facilities to do more production. He answered that like a champ. Their estimate is actually a conservative estimate, just in case there's some major weather situation. So everything else was pretty good on this. And I mean, we'll see how it trades tomorrow, because honestly, there's so much day trading of this stock up and down. But this was, from a fundamental perspective, a legitimately good quarter. And it justifies why this thing trades at the multiple it trades at, and gives you a sense for what might be the areas of growth, even above and beyond the growth in the automobile business, which, by the way, is still not the biggest market share of the total addressable market. Okay. Yes, that's correct. Well, he's projecting 1.8 million cars sales, and so 2 million would be the capacity, but he's guiding towards 1.8. Hey, David, thanks for checking out the YouTube channel. All right. The other thing that I wanted to show, this was the question. This is a great question, Kim. Hopefully you're still with us and you didn't get bored with me. Has Tesla been shorted these last 3 months? Yeah, for sure it has been, but even more so, the real pressure on Tesla, fair and square, comes from Elon and his massive selling of stock to fund Twitter. And that is what it is. You can tell from Tesla that part of the issue, even with Twitter, is that he doesn't like debt. Period. He never has. This story has never been a story about having trouble with financing. One of the major components of this story is that Elon is Elon, so he does not have to go to the debt capital markets to have an interest rate and a liability for shareholders. He can just rally the troops and somehow magically end up being capitalized in equity. And in fairness to him, he can produce the numbers that justify that valuation. So that is what it is as far as that goes. But Kim, your question is spot on. And that's my concern, is that there are still crazy momentum traders that are desperately looking for stocks to short. However, it drives me crazy that they choose Tesla, because this truly, by and large, is the strongest earnings report thus far. There is no one else that is doing top line growth over 30% and bringing it all down to earnings well over 50%. So we'll see how the shorts decide to play this tomorrow. But in my opinion, if you're a fund manager and you're like, I need tech exposure, you have this, or you have declining earnings growth at Microsoft, which just reported last night. Your choice, my friend, your choice. Any other questions that are coming out? Let me see if I check the feed. Sometimes it shows a little differently. Okay, I'm not seeing questions. Stick them in the comments. Good luck out there in the marketplace. I wanted to keep this a little bit short. I always personally answer the questions as quickly as I can. I apologize if it's a little bit slower during earnings season.